Yesterday I went to the barber shop, and when the barber asked me how I wanted my beard trimmed, I told him to do as he saw fit. Well, in the end, he didn't bother with any complicated styles, he just shaved it off. I told him that if a girl came to him and gave the same answer, she'd probably leave bald because it's much easier to just shave her head than to bother with any hairstyles. So here's the thing. Yesterday, in much the same way, everyone who left the fate of their trades up to the master's discretion got shaved as well. That is, those who didn't set a stop loss, who overleveraged, who were sure they knew where the market was going, but the market went the other way. And here, when we use the word master, it's actually not by accident at all. Everyone's talking about it in the news. People lost 20 billion, 100 billion, or however much in liquidations. I don't know, I don't read the news. Somehow the news still reaches me in echoes. But for some reason, no one talks about the fact that the law of conservation of energy applies in the market. And when someone loses 20 or 100 billion, at the same time someone else makes that money. And that someone is the very master who shaved the crowd. And I wouldn't say that this is pure manipulation, because sometimes there's a situation where a huge massive boulder is standing right at the edge of a cliff. And you can give it just a gentle push, and all the potential energy stored in that rock will be unleashed in a devastating collapse with minimal effort. Devastating. Crushing. Deafening. I even came up with a new word for it. A similar situation happened on the market. I don't know any insider information, I don't know the balance of power between buyers and sellers, but we'll get back to the chart now. And everything went exactly according to plan. I'm not going to act smart and say, I told you so. Sometimes I'm wrong, sometimes I make accurate predictions, but overall, nothing surprising happened. So look, the market was standing still for a very long time. Bitcoin rose to new all-time highs, breaking them several times. Ethereum got close, it didn't break its highs, but it came very close. And all the other altcoins basically stayed in place. In other words, absolutely nothing was happening. And everyone was waiting for that wonderful alt season to begin. Everyone was buying in, and in the end, this alt season turned out to be that everyone was up to their ears in cryptocurrencies, in their pockets, in their mouths, coming out of their ears. But who is going to pay for this party? At whose expense? Who is going to pay profits to all those who bought these altcoins? No one will. And that's why this crowd, which no longer had any money to buy and was just waiting for some generous uncle to come and hand out money to everyone who bought altcoins, was punished by the market. The master came and said, I'll give this little stone a push. That little stone went tumbling down. So here we have the chart. Look, we don't have that many levels. Here they are, the white and blue ones. I marked out the scenarios. And when we were at the price of 121,000, it was either we go up to a new high and then probably either a return to $117,000 or even to the 200 period moving average or maybe even the 300 period. Notice it happened exactly according to this scenario. That is, we touched the 200 period, touched this white level at $102,791 and the 300-day moving average. It was from this level that we saw the final reaction, such a massive rebound. Right now, the price hasn't just stopped anywhere. Notice, it stopped in the area of this high from May 22nd at the highest daily candle close. Back then, we had a correction, and the correction took us down to about $101,500 from around 112, let's say. And as long as this level hasn't been broken, we can't talk about a continued move downward. What else should we pay attention to? When the market experiences such massive drops, it becomes depleted. There's no fuel left below for further decline. What serves as fuel for a drop? Stop losses and liquidations of buyers. Right now, people are afraid to buy. Most likely, no one will be buying. And if anyone does, it will be very cautiously, and most likely, they've already learned from bitter experience and will use stop losses. That's why the market needs to accumulate energy in order to move further down. The probability that the market will continue to decline is, let's say, very high. Why? Because this drop and sell-off didn't just happen on the futures market, it also happened on the spot market. This means that someone was actively being sold to here at the price of 120,000, at 115, at 110. Well, actually, it's a debatable question as to how actively people were being sold to, but they were being sold to nonetheless. Which means they'll want to buy back cheaper. That is, if the price dropped this low on the spot market, it means there were sales at 109, at 107, at 105, and so whoever was selling will want to get their money back and they'll want to get it back with a profit. There was a lot of selling, which means there were reasons for it. Most likely, they want to make more money, to collect more bitcoins from the market, and that's why this movement will almost certainly continue. But let's remove all the drawing tools. The ones with our distinctive color markings. We truly don't need them anymore, as they have fully served their intended purpose. Now, let's carefully look at something else entirely. The most likely scenario, the most probable scenario right now, looks like this. There will be some sideways movement here, possibly with a move into this area like this. Then, most likely, we will proceed to thoroughly test these crucial middle lines, and subsequently, after that, the downward movement will probably continue its trajectory. And it will continue at least into the area of this minimum, this little point right here. So I think that we'll see this kind of scenario. So, where are our middle lines? Right now, they're around the $115,000 area, maybe $116,000, but I'd say $115,000. Let's draw $115,000 here. This is the scenario. And I don't rule out the possibility that we'll see a move even lower. That's the entire analysis for today. I don't even want to look at any higher or lower time frames right now. Well, actually, it does make sense to look at the higher ones, at least at the weekly candles. Why? Because when such significant fluctuations happen, the market freezes for a moment and decides where to go next. Well, the market, meaning people. Because right now, even ordinary, everyday traders can't figure it out. They need to recover from the shock before deciding whether to open long or short positions. So I suggest we also wait for now and watch how the situation develops. How I see it, how I expect it to unfold, based on my professional experience, I've marked on the screen. But whether it will turn out that way, we'll have to wait and see. Now let's take a look at the weekly and monthly candles. And with that, let's wrap up our rather simple review, which was more of a reflection. So take note, despite this week's decline, it's by no means certain that it has completely engulfed the previous week of growth. This could also indicate that it was a stop-loss hunt, a clearing of the market from excess buyers, and there were a lot of them, especially in altcoins, which is why they dropped so much. There, it simply triggers a chain reaction of stop-loss liquidations and everything else, which is why the market falls like this, though of course the big brother is also lending a hand. But overall, it's still far from clear how this week will close. If it closes without a bullish engulfing, then there will be significant, well, maybe not significant, but there will be a chance that the scenario of renewed growth to new highs will play out, or at the very least, Bitcoin will move into a sideways trend, and maybe even we'll see some kind of alt season. But right now, at this moment, there is a bullish engulfing, but today is Saturday, and we need to wait until the end of the week. By the way, the Chicago Mercantile Exchange closed somewhere around $114,500 or $115,000. I shared this information in the Telegram channel. So, the chances of returning somewhere to the $114,000 to $115,000 range still exist for this reason as well. Notice that we've approached the 50-week moving average. We've already come close to it, which means that if we now deliberately start moving down towards it, there's a chance we could drop to the 100-week moving average, which at the moment is $80,000. That's all. There's nothing more to add here. The RSI is trending down, but that's to be expected. I wouldn't rely on the RSI here, but overall, the situation doesn't justify taking a long position. So yes, you might be afraid of missing another wave of growth, which ended with last night's drop. For some it was night, for others it was daytime. But I wouldn't consider going long right now. And as for the monthly candles, it's too early to draw any conclusions. But here we have an indecision candle, which allows for both continued growth and a decline. Strictly speaking, the color doesn't even matter much if the candle has no body. But I want to emphasize that we have a potential double divergence here, which favors the downside. That's it. Subscribe to the channel and leave your comments. We'll probably do a more detailed review on Monday when the weekly candle closes and there will be some new information, the start of a new week. Goodbye.